You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, we're here the 11th day of May. The markets have really been on a roller coaster ride, but as my next guest will explain, it's a roller coaster ride downward. You know, the thrill on the roller coaster is when you go up and then you get to the top and it gets slower and slower and slower. And then you hit the top and it's downward really fast. And you repeat that process. How many more of these ups and downs are we going to get here, Octavio?
Well, I think we're going to see quite a few more downs. And I think the reason for that is if you saw how the inflation numbers came in earlier today, they're not showing any indication that inflation is slowing down. It seems that it's sort of marking time right now. It's still above 8% a year, which is a lot. If you believe the numbers the Department of Labor comes out with, I have some questions about that. Nothing I'm buying seems to be only going up by 6 or 8%, whatever.
You're shopping in the wrong stores, Octavio. That's
apparently I am. I'm driving the wrong car and shopping in the wrong shops, and I'm doing everything wrong. I'd be quite happy to get 8%. I think inflation overall. I think that sounds quite contained. I personally think it's probably a lot higher than that. So the Fed is not going to be able to ease up. They had, I think, somewhere in their mind this idea that they would increase interest rates to 2 or 3% over the course of half a year, and that would be enough to take care of things and then to go home. And I think the evidence is starting to mount that that's not going to be enough. They're going to have to be a bit more aggressive, or a lot more aggressive, in terms of increasing interest rates, and that's going to be pretty bad for equities markets, bond markets, housing markets. Basically, all asset classes are going to suffer as a result of this because they've all benefited from the sort of monetary largesse of the Fed. So we're going to see this unfold now in reverse a bit. So it is a roller coaster ride. There's going to be a lot more of these going down, I think, more than anything, and there's not much respite in store, I'm afraid.
You know, in the good old days, we used to call this the Fed taking away the punch bowl. But here, I think they've taken away the eggnog and the rum punch and everything, all stimulants and depressants, and you're just left with a declining market.
Yeah. I mean, it might be worse than the punch bowl. It might be they were handing crack pipes to everyone for a couple of years, and now they're stopping it, or saying, actually, they're not stopping it entirely. They're saying just not as many crack pipes per day. So you get 3 hits a day rather than 5, I think, is where we are now. And that feels pretty bad.
It's funny you mentioned crack pipes because there was a big stink about 2 months ago that the administration in their stimulus had allocated like $5 billion for crack pipes and narcotics paraphernalia. And I guess not enough people used it. So now they got to suffer through this, right?
What do they do with excess crack pipes? You think that there's some government warehouse somewhere full of crack pipes? They couldn't give away.
The same warehouse that the Holy Grail got stored in, Indiana Jones, you know? They got a warehouse for everything, the U.S. government, right?
That's fantastic. Yeah. No, I could just imagine the Holy Grail and the crack pipes right next to each other at the end of some enormous warehouse.
Well, to some people, crack pipes are the Holy Grail, but we know better. So how long does it go on for? How long before the Fed backs off? Because they're going to back off here. I don't believe that any Fed chair wants to be known as the person who crashed the global economy and sent 7 billion people into a major global depression.
No, you're absolutely right. No one wants to be known as that guy or that girl. And so they're going to try and avoid that as best they can. However, that being said, they also don't want to get in a situation where inflation gets even worse and the politicians start to step in and sort of take over and take control away from them, wrest control away from them. So they're very keen on keeping their control over the financial system and the monetary system. They don't want to give that up. And if inflation becomes too much of a problem for the politicians, they will exercise that kind of pressure on them and say, if you don't get this under control, we'll have to step in and do something ourselves and replace you, or come and find a guy who's going to do the right thing. So I think they're afraid of that. They're afraid of losing their own power and prestige in that way as well. So they're faced with those two possibilities. One, I think they collapse the markets and lead to serious, even more serious corrections of the markets than we've seen so far. Or they back off, as you said, and they let inflation rip. But I don't think letting inflation rip is going to be politically viable. I think that's going to come with a huge political cost for whoever's in power, and they will exercise a lot of pressure on the central banks to try and get that under control.
Yeah, well, there's one other choice. They could just change the inflation measurement, and then they'll have succeeded on the war inflation, and then they move on to the next thing. This reminds me of there was a food additive show one time, someplace in the U.S., and they were interviewing a guy, and about food additives, and he says, well, what's your biggest problem in this industry? And he said, what this country needs is a stronger white rat, meaning that, hey, they're testing all these things on white rats causing cancer, but if we had a better white rat, things would be better for the country. And if we had a lower inflation guesstimate, we mess around with the measures like we've been doing the past 40 years, the country will be better off for it, right?
Well, I think they've already done that. I think they've exhausted those possibilities at this stage. I think they've manipulated the numbers so much. And it's so obvious to everyone that there is very, very strong inflation that they can't get away with it anymore. So I think they've done as much of that as they can. They've manipulated the readings down. They've basically removed anything where prices go up from the inflation index and left sort of a very, very stable set of things within that. But I think it's obvious to everyone that inflation is a big problem. And I think Americans cite that as the number one concern. I mean, I don't know if you watched Biden's speech. Actually, I couldn't watch it. I read the transcript because I can't watch the man.
I want to get tortured, Octavio. I can think of other more pleasurable forms of torture than watching politicians spout out lies and inaccuracies. And that's just not the current occupant of the White House. That's all of them. So I always read the write-up afterwards because it's too aggravating.
Yeah, I agree with you. I read the transcript because I feel it's important to know what is he thinking and what is he saying, or what is he purport to be thinking.
What are his handlers thinking, right?
Yeah, but so that was you and I have talked about in the past, what does Joe Biden do in this situation? We had sort of thrown around the idea of price controls or something being done.
Yeah, so
I'm reading between the lines in what he's saying. I think he's laying the groundwork for that, and he was basically saying that he's. I love the way he said, there was a line in there. He said, "I am a capitalist, but I don't believe
work for the government and I want to take your capital, right? Yeah. I'm a capitalist, but we're in the business and government of destroying capital, not creating it, increasing it, right?
Indeed. But so he was basically complaining that some companies are taking advantage of the situation, and he feels companies should be allowed to have a reasonable return on their investment and a reasonable level of profits, but not unreasonable. Well, he's going to let us know, I'm sure. He's going to let us know exactly what a reasonable level of profitability is, and he's going to make that clear at some stage in the not too distant future, I suspect. And that's going to be really bad, I think, for US companies.
So I want to make one thing clear. You and I have lived through inflationary cycles before. Companies, especially larger ones, do take advantage of the decreased resistance to price increases, and they will increase their prices above the rise in their own costs wherever possible to further maximize their profits. Now, you might call that taking advantage, and perhaps it is. But at some point, the market says, no mas, we're just not going to buy your widgets. We'll go to the company B because their widgets are 10% less and they're just as good as yours. So, but, companies do raise their prices faster than the rate of inflation, although now it's a little difficult to do that because the rate is so high, especially if you're in commodities. Octavio, what are your thoughts about energy? I mean, it's hovering $100 a barrel. Natgas, your side of the pond there, is out of control and threatens to get worse if the pipelines get shut down.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, I think a lot of the inflationary pressures, of course, now concentrated in energy prices. What we saw over the course of the past month is easing a bit, actually. So petrol prices, gasoline prices in the US have come down a bit in the last month, and
temporarily.
Probably temporarily. These things aren't sort of straight monotonically increasing. They do go up and down. It's never just a straight line up. So I think that's probably temporary decrease, but there is a bit of a respite there when you say, okay, it looks a bit better on the energy front and not as extreme. But still, certain things are going up like crazy, like heating oil is going up still really aggressively.
Food? What about food?
Food, but there's too much food anyway, right? You can make that argument.
We throw away most of it, right?
We throw away most of it, and we're all overweight, right? We could stand a bit of a diet. Not you could, but I could. I could lose a few pounds. I mean, we'd be kind of welcome if it was priced out of my reach.
We could be looking at just let's just start taking cricket paste. That seems to be on the menu at more and more restaurants. And we got all I didn't want to go into what
kind of places are you eating at? Cricket paste? What?
Place close to farmland, Hey, I saw it once, I have to admit, and that was about 10 years ago. And I still haven't gotten over my nausea of it. I gotta tell you, man, that is like some wickedly nasty stuff that I would never look. I've got a year's worth of emergency preparedness food. That stuff's bad enough, all right? But at least it's edible, and if they call something a pasta noodle, it actually looks like a pasta noodle. There's no substitutions in there from insect protein, and oh my God, you know what's going on here, Octavio. This thing is madness.
Yeah, I think you're probably doing the right thing. I should get some reserves as well. I think that I haven't. I did during COVID in the early months, where it just looked like it was so uncertain what was happening, and I've let this lapse now. But I need to probably get back into that and sort of plan for the worst case scenario, however that looks.
Heck yeah, everyone should have it. I've been a proponent of this for Octavio for years and years because you also have these things called natural disasters, especially here in Florida. We could be cut off for a week or two, conceivably, if we get a couple of really bad hurricanes. And not to say that I'm an uber prepper, but I do believe that disasters happen. They're just a normal part of life. Hopefully you're not part of the disaster. The definition of a minor disaster, Octavio?
Is something that happens to you? Or?
No, something that happens to other people. If it happens to me, it's a major disaster. Happens to you, that could be minor. Right? So disasters happen. So disasters happen in markets too. Do you think this is an unfolding disaster?
I think it's definitely an unfolding disaster. And the one area that concerns me a lot as well is the housing market. And a very particular kind of unfolding there, because the Fed has been out there purchasing an awful lot of mortgage-backed securities. And so they've basically been supporting that market to the tune of buying 35 or 40% of all the mortgage-backed securities in the country, which account for the bulk of all the mortgages in the country. So indirectly, the Fed is by far the largest real estate owner in the country and in the world, probably. And so they are slowing down those purchases, and that, of course, is driving interest rates up on mortgages. But I think in particular on the kind of mortgages they've been buying. So bear in mind when those two, the government agencies, Fannie Mae and Freddie Mac, buy mortgages, and package them up as mortgage-backed securities and then sell them on primarily to the Fed in this case, they have certain rules in terms of what they can buy and what a conforming loan looks like. And in most markets in the US, the cutoff is about $670,000. In some markets, it goes up to close to $1 million in particularly expensive markets. But it's that end of the market that's going to start to unfold and unravel there. And I think we've started to see that already. The existing home purchases are starting to slow down quite significantly, particularly at that end of the market. And that's simply because the Fed is stopping or slowing down its purchase of mortgage-backed securities. Now, they're slowing down their purchases, and they've said they're going to actually start to unwind some of their positions and sell them. And that's going to put even more pressure on those markets. So I think we're going to see a bit of a disaster at that end of the market in US real estate. Not so much the high end. Anything at $1 million above, I think, is going to be better, relatively speaking. But below that, there's going to be some pain and suffering.
All right. Well, I think you very well could be correct on that. The tree does not grow to the sky, as our good friend Benjamin Graham used to often opine, and this tree is no different than any other tree that we've encountered in history. And, well, thing is, though, we do truly have a housing shortage in the United States. Now, granted, there's 16 million empty units, not quite as much as China at 64 or 68, but a substantial number of vacant units. But they're units like second homes, investment properties, all that. How bad do you think the real estate bust can go?
I would not be surprised at all to see prices come down 25, 30%, something in that range, depending on which market we're talking about. So I think that kind of correction is easily in the cards. I mean, you just have to look at what happened to housing prices and where they started to shoot up. They basically started to shoot up in March of 2020, when the Fed went on a buying binge for mortgages. So they pumped $500 billion into the mortgage markets in that month in 2020. Yeah. And that's exactly the point where you see that inflection and the growth rate start to go up really quickly. Right. And housing prices have gone up about 30% since then in the US overall on average. So I think a retracing of that increase is entirely plausible, and it might even get worse than that on the downside. So things sometimes overcorrect in the opposite direction. So we might see even worse than a 30% decline in housing prices.
30%. Well, honestly, compared to the increase that we've seen, that's just a normal correction. But the people who are at the margins, they're the ones who are going to get burned, right?
Absolutely. And I think the people going to get the most burned in this are going to be exactly those mortgage types that form the basis of mortgage-backed securities, which are smaller mortgages or mortgages below $700,000. And that in the market, I think, is going to be in for some real pain. And there, I think we could see corrections of more like 35, 40%, something of that sort. The higher end is not going to be as severe, but on the low end, where mortgage-backed securities play a more important role and an absolutely dominating role, we're going to see some real pain.
All right. Well, I'm inclined to agree with you. It's already difficult to get a mortgage. It can only get worse. And, well, it'll be interesting, Octavio, to see how long this recession lasts. Because at some point, if the economy is going to collapse and inflation looks like it's getting a little better, or we learn to live with 5% inflation, the Fed is going to race back in and do what they always do, which is print money. I'm looking forward to seeing that. Hey, we find you at Opimas, Opimas.com. If you got a question for Octavio, shoot me an email to kl@kerrylutz.com. And don't forget, get your free newsletter at our site, financialsurvivalnetwork.com. Octavio, always a pleasure. We'll talk to you again real soon.
Thank you so much, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.